welcome to today's edition of Money Moves. I am Melissa Enoch here at the NGX trading floor in Lagos.
And I'm Grace Agbaragu. It's Thursday, the 11th of June. We thank you for joining us at this time on the show.
All right, let's begin with news now. The South African Reserve Bank has released its Financial Stability Review, providing an assessment of the stability of the country's financial system. The report, mandated by the Financial Sector Regulation Act, outlines the bank's view on key risks, resilience, and overall stability of South Africa's financial sector. Let's listen.
When we released the previous edition of the FSR in November last year, the outlook was positive. South Africa had been removed from the FATF grey list. We had our first sovereign credit rating upgrade in almost 2 decades. There was growing evidence of progress in implementing structural reforms, and fiscal dynamics were improving. It felt like everything was going well. We are not used to everything going well, so the positive assessment felt a little unreal. Still, the facts were there, and they were compelling. Unfortunately, facts change, and as Keynes reminded us, when facts change, it is wise to change your mind. The Middle East crisis that began in late February is just one of those exogenous shocks like COVID and the Ukraine war that you can't really forecast, but which nonetheless transform the outlook. We had oil at $60 a barrel, inflation at 3%, and we were cutting rates. Now we have oil around $100 a barrel, inflation is at 4% and rising, and we have raised rates. So last week I made the point that uncertainty had declined lately, but only because things have become decidedly worse. And the one thing that we were certain about was that uncertainty.
In Rwanda, the Urban Consumer Price Index rose by 12.9% year-on-year in May, slightly easing from 13% in April, according to the National Institute of Statistics of Rwanda. The data shows that urban prices increased 0.5% between April and May 2026, while the average urban inflation rate for the year to May stood at 8.7%. Across the country, inflation remained elevated, with rural prices up 11.8% year-on-year and national consumer prices rising 12.3%, reflecting persistent price pressures. In other news, leaders and economic stakeholders gathered for Uganda's 2026/2027 national budget speech as government outlined its fiscal priorities for the year ahead. Henry Musasizi, the Minister of State for Finance, Planning and Economic Development, presented the budget focusing on growth, fiscal discipline and development expenditure. Here are excerpts.
The challenge is ensuring that growth translates into jobs, household incomes, enterprise development, and prosperity for every Ugandan. That is the essence of full monetization, as His Excellency the President has consistently emphasized. That is the focus of the tenfold growth strategy, and it is the central objective of this budget. Mr. Speaker, sir, financial year 2026-2027 marks the commencement of the implementation of the NRM manifesto. It is also the second year of implementing the fourth National Development Plan, the first plan specifically designed to deliver the tenfold growth strategy. Mr. Speaker, sir, and honorable colleagues, In the spirit of protecting the gains, we have maintained the financial year 2026-2027 budget theme as full monetization of Uganda's economy through commercial agriculture, industrialization, expanding and broadening services, digital transformation, and market access. This theme is aligned with the East African Community Budget theme of deepening regional integration and economic resilience through improved regional security, domestic revenue mobilization, and digital transformation for inclusive growth. I now come to the recent economic performance and outlook. Mr. Speaker, sir, despite geopolitical tensions, global trade disruptions, and continued uncertainty in the world economy, Uganda's economic outlook remains strong and positive.
Finally, on News Now for today, the World Bank Group warns that the conflict in the Middle East is pushing the global economy towards its weakest growth since the COVID-19 pandemic, with output now projected to slow to 2.5% in 2026 from 2.9% in 2025. The latest Global Economic Prospects report says the shock from energy markets, particularly the closure of the Strait of Hormuz, has driven up oil prices, with Brent crude expected to average about $94 a barrel in 2026, fueling higher inflation, which is forecast to rise to 4% this year. The report also flags significant downside risks, warning that if disruptions worsen, global growth could fall as low as 1.3% in 2026, while developing economies face a sharp slowdown that could halt progress in narrowing the income gap with advanced economies. I am Melissa Enoch, and that's it on News Now this Thursday. The show returns shortly with Grace giving us our market updates. Stick around.
Yes, I'm concerned that we are not completely internalizing yet that this is how the world is going to be. We are not going to get to a place where shocks are gone. And what should we do? I have been telling our members time and again, look, there are things you cannot influence, but how you take care of your own country, how you build the foundation to withstand these shocks, it is in your hands. And we brought a program for Ukraine, for support of Ukraine. What impressed me was that we got full support, of course, with the exception of one country. And what it demonstrated was that there is a recognition that the fund bears a responsibility to support countries in difficult position, especially when they are not necessarily the source of this difficulty. There was a discussion whether we can do an assessment of the Russian economy, the regular assessment. And at that point, it was a very tricky moment because bombing was going in both directions. We decided to delay. I think that at some point we will have the regular assessment restarted. Let's see when this point would be.
Similarly, the Ghana reference rate eased to 10.06% in April 2026 compared to 23.99% a year earlier. Also, average bank lending rates declined to 16.3% from 27.4%. In line with this, private sector credit rebounded strongly in April, up by 28.7% in nominal terms, compared with a 19.9% growth in April 2025. In real terms, this represents a growth of 24.5% compared to a contraction of 1.1% over the same comparative period. Now, provisional data showed that fiscal performance for January to March 2026 reflected strong expenditure containment measures amid revenue shortfalls. On commitment basis, the fiscal balance recorded a surplus of 0.1% of GDP against the target deficit of 1.2%. The primary balance also recorded a surplus of 1.2% of GDP against a surplus target of 0.2%. The public debt stock of central government and guaranteed debt, these also rose to 674.1 billion Ghana cedis, constituting 42.2% of GDP at end February 2026.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for updates on how the markets close today. Hello there again, Grace.
Hi, Melissa. Let's now take a look at how the markets traded today, starting off with the equities as usual. The NGX All-Share Index was broadly flat, down 0.03%, while the BRVM in Abidjan gained 0.34% to 437.10. The Nairobi Securities Exchange slipped 0.03% to 209.04. In the south, the Johannesburg Stock Exchange rose 0.61%, while Mauritius' SEMDEX fell 0.35%. And in North Africa, Egypt's EGX 30 declined 0.85%, closing at 50,818.84. while Morocco's MASI dropped 2.27% as at 14:33 GMT. Finally, let's take a look at the soft commodities. Cocoa slipped 1.46% to $3,702, while coffee rose 1.05% to $251. Cotton gained 1.01% to $76.06, while palm oil rose 0.91% to $1,103.52, and sugar fell 0.72% to $13.82 as at 14:20 GMT. And that's our Money Moves markets today. Back to you, Melissa.
And that's it on today's edition of Money Moves. From all of us here at the NGX trading floor in Lagos, we say thank you very much for watching and have a splendid weekend, everyone.